traders, Cousin Vinny coming to you on January the 18th from theclosingprint.com with a look at the week ahead and some setups for the week. In this video, we're going to cover the bullish and bearish scenarios and the catalysts that we are looking at. In addition, we're also looking at the tick cumulative on a buy signal, trend. We closed at the lows on Friday, as you might have noticed. And also with the New York Stock Exchange composite, we see net new highs, net new lows, making a higher low. So breadth is positive. We're looking at Elder versus the Bollinger Bands. In addition, we're watching bonds. Remember, seasonality since 2009 has been 43% versus 83% in the months of February, March, and April when it comes to indices opening at a low and closing at a higher low during that month. So 43% in January and 83% in February, March, and April since 2009. So we have that going for us. In addition, we're looking at the setups and industry groups, the IBD 50 and high tight flag scans, as well as a couple of stocks in the Bollinger Band scan group. Notable are gold stocks and crude going into the week. As we mentioned, the New York Stock Exchange new highs minus net new lows. We also held up off of the lower Bollinger Band where we pierced that level on the week of December 9th. So I'm thinking, along with a few other things that I've read this weekend, that we could see a sideways range developing. But what's really significant is the EMA here, the 10 EMA, the number of new highs versus the number of new lows, hit a real low point in the October sell-off. Again, we saw another V-bottom in the week of the 9th, but the most recent selling did not produce a similar effect on the net new highs minus net new lows ratio. So in effect, this is showing a bullish divergence, and we can assume that we will continue the bounce from Friday into the fourth week of January. Looking at the number of stocks trading above their 50-period moving average for a moment, this is the SPX A50R. We can see that we closed at 43.80. And we're doing quite well in comparison to the NDX A50R, which for the NASDAQ was somewhat weaker. We saw that close at 40 after hitting a low around 26.27 last week. 27% of the NASDAQ composite stocks were trading above their 50-period moving average. Note NIAD and NAD, the advanced decline for both the SPX, the New York Stock Exchange, as well as the composite, are making higher lows. So breadth is looking better. So let's take a look at the indices, in particular SPY. I made a mistake 12 trading days earlier because I was on vacation and not really focused. When we hit this high here the last week of December, I do note that we missed that downside trade using SPY options. Mikey did miss it, however. He was trading SPXU. And I thought, rather than chase the weakness, I saw the long puts strategy had become really expensive compared to the night before. So I waited until we saw a situation where we could enter again. We found that at the 100-period moving average on January 6th. We had a hammer there. We bounced. You can see that hammer here. We bounced for 2 days. I went long calls, did quite well, took some profits there. When we started to reverse off of what we thought might be a descending channel, turned out to be a wedge for the time being. In addition, we waited for trend to give a signal on this bounce up to these highs, and we saw a capitulation where trend had spiked very high, and we decided to take that trade off. And then again on Thursday, Friday, we saw a similar situation where we were down here at the 100 period moving average again, and we moved back up just shy of the 10 period moving average right here at 202.26 last week. Note where slow stow is. A different version, and look at the situation here. We had this very large volume by price that we were pointing out where we'd likely see a bounce. We had 5 consecutive lower closes, followed by 2 up days, followed by another 5 consecutive lower closes here. We were looking for a bounce on Friday, and we got that. We were long calls going into the end of the day, and we did quite well on that trade. Looking at the Bollinger Bands, we came right down to the lower Bollinger Band, and we're moving higher. We're back into the standard deviation 1, the darker shaded area. So we're watching how this plays out going into the week. 15-minute SPY, we pointed out on Friday that we had some bullish divergences on stochastics with these lower lows that we're making on both the 15, the 30, and the 60-minute charts. So we were feeling pretty comfortable going long into the end of the day. We rallied pretty well. We went right through the 382, and we had the 50% retracement just overhead, as well as the 200 period moving average. So keep that in mind. The 618 is above that, and we have a descending trend line to deal with. 30-minute, roughly the same thing. We have a lot of volume here to deal with on these volume by price bars, but we're pushing through those quite nicely. We had a trigger on the 30-minute stow 144 duration. Again, we had a bullish divergence on the slow stow 5-1 and 14-1, which you can see here. We had lower lows on price and higher lows on stochastic. So we stuck with the trade. 5-minute, we pointed out late in the day that we saw what's called an indie setup if you follow HCPG. We had the R1 above, we had the moving averages below, and we saw it squeeze right into the R1, and we busted right through that level. Note on 144 we are overbought, but the longer term durations still have juice left in the tank for a move higher. Again, here's that lower low, higher low on stochastics, keeping us with the trade. Fibonacci's from the high at the last week of December down to the lows on the 6th, where we had that hammer. We take those pivots, we have the 50% overhead as well as the 382. We have a nice crossover of the moving averages, and we're looking at least for the 382, hopefully for the 50% moving the 50% fibs with the 200 period in the same area as this descending trend line. So look for that on Monday. With regard to the 60-minute stow, again you see that divergence, higher lows on stow, lower lows on price. And then again on the weekly, we had a nice dragonfly doji last week, and we had a spinning top this past week, holding off of the 26 period moving average and the 20 period just below price. Looking at the NASDAQ composite, we see a similar situation where we held these lows from the last week of December, early January, and we bounced. Came back down to that level holding. We have Fibonacci levels here, 382 and 50% with this descending trend line overhead, as well as the 50 period moving average, the green line. No Bollinger Bands have turned direct and made a change in direction. We pierced it a couple of weeks ago and we held off of it on Friday. We're pushing higher, so look for the NASDAQ composite to continue to move higher. We'll be watching these volume by price bars, these levels here at 50%, right around the 4,700 level on the composite. A chart of the Dow Industrials, we can see that we had this Fibonacci retracements from the highs down to the lows. We have 382 above, right at the 10 period moving average, the blue line, and we have the 50 period moving average right around the 50% retracement. So we're looking at that as a likely target short term, and we'll reassess there. Again, we're seeing what could be developing as a sideways range. Note the volume on Friday as well as slow stow turning and MACD histogram which is starting to move in the opposite direction. So downside momentum has waned, and now we're starting to move in the opposite direction. Look for these to cross over to the upside and give us a buy signal on the 514.5 MACD. Looking at the small cap stocks, the RUT, the Russell 2000, we made lower lows here. We did reverse on Friday, obviously. Stochastic RSI is pushing back up with a buy signal, and we have a higher low on stochastic, so we have a bullish divergence there as well. Note the MACD histogram is starting to point higher, so downside momentum has waned, and we're starting to see a move back in the opposite direction. Look for a continuation up to, including the possible break of this trend line, the 50-period moving average, the green line, and then the 20-period moving average here at 1195 or so as upside targets, as well as previous highs that we saw back at the end of 2014. This is a chart of TLT with the US dollar, the shaded area, and the background. Obviously, with regard to the 20-year Treasury bond, we continue to see higher highs. We're outside the upper Bollinger Band standard deviation 2, so we're expecting this to pull back in during the week as we continue to rally on the spiders, with slow stow overbought and looking like it could slow down somewhat and give us a reprieve where we might be able to buy some bonds in our 401k. So looking at our RRG, relative rotation graph charts, and the S&P 500 sectors, we note that XLV, XLU have been somewhat strong in each of the three V-shaped bottoms that we saw since October. If we scroll back here and note here on the upper right hand corner that the week prior to the bottom, XLV was here, and we see XLU improving and headed towards the leading sector. As we scroll forward in the next week, we see XLV and XLU again stronger, improving here. We scroll forward into the weeks preceding the December V bottom. XLU, XLV, along with some of the other sectors were in the leading sectors. We scroll forward, note XLU, XLV continue to stay inside of the leading sectors. XLI, XLP, XLF are in there as well. Also note here, you can rewind this video and look at what was the top 4 or 5 sectors in the weeks preceding and the week after the V bottom for preparation for trades going into the week. So again, you see here XLV, U, P, and Y, as well as XLI as the top 4 or 5 sectors going into this bottom last week. We'll look for strength in those sectors going into the week and stocks in those groups. So let's look at some setups going into the week. This is the Bollinger Band scan. We have about 10 candidates here. ASX Advanced Semiconductor. We noted that early in the week. Previously, we had seen semiconductors doing quite well, relatively speaking, with the S&P 500 and the NASDAQ weak. We saw these are moving higher during the week. We have a break of this volume by price level and this upper trend line on ASX Semiconductors. Remember to check your earnings dates on stocks that you consider taking a trade on. Likely targets is 671 area. We'd break above that, we could see a move higher. No Bollinger Bands are tight, and we are moving higher on ASX. Aetna, we noted that a number of healthcare provider names are doing quite well. Note the new highs, Bollinger Bands tight, the 50-period moving average moving higher, and slow stow turning up, as well as MACD. Centene, another healthcare provider, CNC, nice tight Bollinger Band. This is one of my favorites going into the week. A break above this level looks to be in the cards. 50-period moving average moving higher. We have the 10, the 20 moving higher as well. Slow stow is pointing higher. We got a MACD cross last week, And the longer duration 1226 is moving higher as well. CYS mortgage REITs, nice Bollinger Band squeeze, popping higher on lower bond yields. FedEx, FDX looking quite well, looking very good on this triangle pattern, break above the 50, tight Bollinger Bands. It looks like we're going to break above this volume by price bar with slow stow pointing higher, as well as MACD. Frontier Communications in the mobile telecommunications group, industry group, we have a break above this trend line, volume by price bar. All of the moving averages are below. We're looking very nice on this little flag pattern going higher into the week. Slow stow flagging here and turning back up, as well as MACD showing positive momentum. Hawaiian Electric, another utility name. Remember XLV, XLU was doing well on the RRG charts. Nice tight Bollinger Bands following the 10 and the 20 period higher. Slow stow pointing to higher prices, as well as a MACD cross on Friday. Hospira Pharmaceuticals, nice triangle pattern breakout, tight Bollinger Bands, 50 period moving average moving higher. Not much in the way of overhead supply. Humana, another healthcare provider, you can see the pattern here. Bollinger Bands starting to spread, higher highs. We're going to take out these levels, very little overhead supply, 50 period moving average moving higher, and still turning back up. Decent volume, nothing to write home about, but looking good. PKG is also on the IBD 50 group. Nice tight Bollinger Bands, we pointed that out last week, and a break on this triangle pattern with packaging. The packaging industry group looking very well last week. Slow stow turning back up, MACD histogram moving higher as well. So that's the Bollinger Band scans, and the last one's PetSmart. Don't know what's going on here, but this is very tight. Almost seems like there's some rumor for a buyout. I have no idea. I'll give you a little peek into the high tight flag scan that I ran this weekend. There's about 24 names on this list that could be potential candidates, just like ADXS, which we pointed out a couple of weeks ago. That's appreciated quite nicely off this 850 buy area up to a close at 1351 on the week. AGEN, a new name on the list. We're keeping an eye on it. Agios Pharmaceuticals, obviously we saw this one back in July, August. We had a breakout flag, and this one's gone on to almost 100% increase since we first took it in this area right here. Alcobra, ADHD, they have a product for the treatment of, you guessed it, ADHD. And it looks pretty promising. We pointed this stock out a couple of weeks ago when it was consolidating right here and starting to move higher. Note these huge Kirby in this area here, filling this gap. We have 12, 13, who knows, maybe 15 in this stock to the upside. Look for a further flag here on Alcobra. Again, I could show you all of the names on the list, but I'm going to keep the video low. Be sure to check the closingprint.com for our posts. Okay, so this is Cousin Vinny coming to you from the closingprint.com. For you new traders, be sure to check out these top 5 or 6 videos, which will give you a better edge on understanding the markets, taking setups, and where to position yourself for the highest risk reward on your trade. In addition, if you don't subscribe to the blog, this is a spam-free site. Enter your email address in here and you can get these delivered to your email every day. You'll note my tweets are here, the watch list for the week or the day. You can just scroll down through these, keeping track of the trades that we're looking at, whether they're high tight flags or Bollinger Band setups. It's also a place for me to document the trades and thoughts going into the weeks. So I hope this helps. Take care. We'll talk to you on the stream on Monday.